Hey guys, I'm Duncan Wilson.
And I'm Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Sweet.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
Hey guys, we're here today. We've actually got a beautiful guest star, Tyler Tiessen from Erie Shores Capital.
And he is a star.
He is a star.
Thanks, guys.
Okay, so basically, guys, there's a lot of chatter out there. Tyler's going to go into some more detail, but today's episode is literally about MICs, Mortgage Investment Corporations. What are they? Where'd they come from? We're going to ask Tyler some questions. He's going to give us the best answers. And he runs a MIC right now. What's the MIC called?
Erie Shores Capital.
Erie Shores Capital. Yeah. Okay. What was the purpose of the name?
Well, we're local to the Erie Shore.
Local. Nice. I like it. I like it. So guys, through this episode, when we go ask questions, I want you to understand what a MIC does, how it does, and Tyler's here to kind of explain that. So give us a rough idea, Tyler. What is a mortgage investment corporation? Like what is
so? In summary, a mortgage investment corporation is an investment vehicle where investors pool their money within a legal company that's governed by the OSC, and we use that money and lend it out on private mortgages within our underwriting guidelines in order to generate returns. So instead of putting all your money on one private mortgage, you diversify within this investment vehicle, and we spread that money across multiple properties within the portfolio.
Great explanation. So I'm assuming it's kind of different than going to a guy named Jim, let's call him Jim for now, saying, hey, Jim, can you lend privately for this gentleman? It's different than that, right?
Right. So there's strict underwriting guidelines. The rates are typically a lot lower than if you were just getting a regular private mortgage from Jim. And
that guy, Jim.
I know, I love Jim.
Jim's such a good guy, but he's so expensive.
He's so expensive. He's just so expensive.
What's he at, 15%?
Jim? Yeah, with a 3% fee.
Wow.
What's the average rate and fee for a MIC?
So with our MIC, what we've been doing for first positions is 10 and 2.5. So 10% rate with a 2.5% fee. Depending on the deal, if it's a low loan to value, good client, it could be lower.
Okay. I got a question. So, as the mortgage guy who's doing, private deals and stuff, does the deals have to be local?
So with our MIC, we try and keep local.
Okay.
Southern Ontario, south of Chatham, ideally. With other MICs, they'll lend anywhere in Canada.
Yeah.
But with us, we want to keep everything local for now.
Okay, that's good.
Beautiful.
And so what are some potential benefits and risks of investing in the MIC?
Good question. Where'd you get that one from?
I just thought of that.
That's a beautiful question.
It just came to me like a shining light from heaven.
Producer Maddie.
Wow. That is excellent.
Okay, go back. What was the question again?
Yeah, just some benefits and risks of investing in a MIC. And then maybe do a comparison to, I know you guys were talking about at the admin company last week, right?
Yeah.
Yeah. So maybe just a little comparison versus the MIC and the admin for potential investors.
So main benefits with the MIC is you get a higher yield, a higher return. Right now we're targeting with our MIC 8.25%. We've hit that since inception.
8.25?
8.25%. That compounds monthly.
Incredible. That's incredible. That would be... So I could double someone's money in like 5 years or so.
It's definitely better than GICs, right? GICs are like 5% on the high.
Yeah, well, I just did one for a client through a credit union, and they got 4.1%. And that was the banker there was talking like it was the B's and E's.
The B's and E's. So like what we're talking about at 8.25 return on the investment,
right?
What are we looking at versus inflation with a return like that?
So
especially in the recent years with inflation, right?
Right. So I'm not too up to date with what inflation is currently, but I want to touch on a little bit more of the benefits with the MIC. So especially in comparison to individual deals, you are diversified. Your dollars spread across multiple properties, multiple different borrowers across.
Those are assets in the mix. So you're spread across completely to lower your exposure.
You're not lending on one property or one borrower. You're lending on as many that are within the whole portfolio. Mm-hmm. So there's a big advantage of diversification automatically just by investing in the MIC. It's also compounding monthly, which is a big benefit. So every dollar you make gets reinvested every month if you choose to do so. And then that really expedites your growth of your investment over years.
Okay. I got something.
Go.
So the cool thing about this episode is because a lot of the questions I have are questions that I have generally because I want to get, like, I'm saving up to get investing. So on touching on, like, you know, you put your investment in and then it gets spread across stuff. First question, like, do the investors get a chance to see where the money is going? Like in an admin company, you know, if I'm a private investor in the admin company, usually I get an opportunity to review the deal,
review it
and
as
see the
an
house.
individual Bob or Jim, right?
So it, like that one, and then two, like, so if I put in 25K, and then you're saying like that might get spread across. So how does it work with the returns?
So your return that you get is for every share that you have invested. So you get the same return as anyone else that's invested in the MIC. If someone puts $1 million in, you're getting the same return as if you put in 25,000.
So it's equal.
It is equal.
So, but okay, maybe a little bit more in depth here. Like, say, like you just need to throw, say you're putting like 50K on something and you take like maybe 10 from mine and 40 from Duncan's. Like, does it still, the 8.25 is just on my 10? Okay.
Yep. How the entire fund performs, it's spread equally across everyone's shares.
Yeah, and in your example, I'm assuming what he's saying is that would only be me and Sasha in that MIC as investors.
Or just on that deal, right?
Like,
because it's a pool of money, right? That you're using for deals. Yeah. Okay.
Yep. And to get back to you, so one of the bigger benefits, when especially in comparison with the administration company, you might not have time. You're busy. You might not have time to review every single deal that comes in through the administration company. So if you have a pool of money, you have $500,000, you could probably do a couple deals through the administration company, individual deals outside of the MIC. With the MIC, it's fully hands off. So you don't have to review every deal. You don't have to know how to underwrite and review documents and decide for yourself if it's a good deal or not. We do that. We're the professionals. So we do that behind the scenes and you just collect your return.
Okay.
Beautiful. Okay, I'm going to suggest though, now that Sasha, knows about his investment that he can be making in a couple of weeks.
Just go sign here.
Yeah. You should have brought the sign up form. My question
This is how you sign up as an investor.
So I'm a mortgage broker. I go and do an application for a borrower and they get declined by a AAA company. Guys watching our episode, if you want to know what AAA means, it's prime lending. Then you got a B lending and I get declined. I, as a broker, could just maybe submit my borrower to you guys. What do you see typically on that side? Like on the underwriting side of your MIC, are you seeing, like, do you need income docs? Do you want to, I'm assuming you want a notice of assessment to show no taxes owed.
Yep.
Right?
So we want to make sure that the investor's money is protected. A big one there is we need an appraisal. We got to make sure that the loan to value is good. Need an appraisal on every single deal. We got to make sure that your taxes aren't owed. So we get an NOA, notice of assessment, make sure that there's nothing owing, because if you do have a big balance owing with the CRA, you can go in front of us on the charge. So we get bumped into second position behind the CRA, which jeopardizes the investor's money.
Yep.
So we always get that. We will get income documents depending on the file. If it's a really low loan to value, maybe we can hold back payments and prepay the mortgage. Then maybe we won't need that. But typically we would, because we want to make sure that the payments are going to be made.
Okay, I got a question. For people that are watching or listening that might be wondering this, if they do have a CRA balance, would you guys, and if it was qualified, would you pay out the CRA balance?
Yep. As long as loan to value, everything's in line, then that's a deal that we would do.
Okay.
Because it sets you up to be able to get out of it. So if you have a CRA balance, maybe we get you a second mortgage for $20,000, pay out the CRA. A year goes by with that second mortgage, and then you go to a B lender or an A lender to get back on track.
So you just said, so it's typically a 1-year term we're putting this borrower into, right?
Correct. Yep.
And so locally here to Windsor, guys, Tyler's already said it, it's a local approach. That's why it's called Erie Shores. Can you compare this to, like, and I have MICs on my platform where I can send borrowers to. I just got one approved. It came back at 15% plus 4% fee. So the total all in is 19%. It's like I'm living in 1991 again in Canada. Like, holy moly. Is there a comparison? Like, you guys what's your typical rates you're seeing from the local side? Because it's local, you can probably reduce the rates for the borrowers, things like that.
So because it's local, we have a better understanding of the market. So it provides a lot more security on our end. Like I was saying to Sasha, it's probably around 10 and 2, 10 and 2.5 for first positions. Second mortgages are a little bit more risky, so we'll probably land 12% with a 2% lender fee.
So we know with private investors, it's interest only payments. With the MIC, is it the same?
Correct. Yep.
You don't have any blended amortization options?
Well, because we're at a higher interest rate, we stick away from blended because it's supposed to be a short-term solution.
Okay.
So keep interest only, keep the payments low. It's a Band-Aid solution. After a year, ideally we want them to turn over to a regular lender.
Okay, perfect. Yeah.
So I would say lots of questions. If you guys want more answers, I mean, from the investor side, which is Sash's side, he wants to invest in this. There is local investor opportunity here. From my side, on the broker side, there's an opportunity to have an additional lender around Windsor, Essex, Southern Ontario that maybe I can get an approval at a better rate for my borrowers. So if you do find you're getting declined by banks or declined by another brokerage, we do have access. Our brokerage is signed up with Erie Shores. I just want to thank Tyler coming in from Erie Shores representing and letting us know what to do and where to send it. And when can Sasha cut you a check for the investment? That's
Right now. He's locking me down right now,
Do you have
guys.
any more questions, but are you good?
I mean, I like this one down here that says highlight tax considerations for MIC investments and provide insights on ideal investor profiles or tips for potential investors.
Right. So that's a good question. So with a MIC, you are able to invest, and our MIC especially, you are able to invest through your RSPs, TFSAs, LIRAs, registered accounts.
Okay.
So there's a big tax savings there. Your interest is tax deferred, so it compounds faster. What was your second question there?
So provide insights on deal investor profiles for MICs and tips for potential investors considering MICs.
I guess like who would be your ideal investor?
Right. So ideally, if you have a large portfolio of money, if you're very high net worth, this would be an ideal investment for you because it allows you to diversify from doing regular individual deals. Anyone that's friends, family, business associates, you're automatically qualified to invest in a MIC. You fall under the exemptions with the Ontario Securities Commission, but we don't want people putting all of their money into our MIC either. That's something we want to steer clear from. We want this to be an option for you to diversify your investment portfolio. We don't want you to go all in on this because this is, by definition, it is a risky investment.
Oh, that was another thing I wanted to ask you, because a lot of people that I come across on my side of things anyways, when they're asking me about investing in private mortgages, they all seem to think that it's risk-free because it's secured to real property. That's not the case, is it?
Oh, well, I would say I like that question, and I know you're going to answer it, Tyler, but I'm just going to say, like, what's a mutual fund compared to this? I mean, I'm assuming this is asset-backed securities that you're doing.
Yep.
So you have the backing of this asset, and I mean, how they get the return most likely from the borrowers paying their interest payments to the mortgage itself. I don't know, guys. I got a dividend fund, mutual fund, and I have no idea what it's in. I don't know. Like, I don't know what is the comparison in your mind from risk standpoint, like mutual funds versus asset-backed securities?
Right. So with mutual funds, you're invested in companies that there's a good chance you probably haven't read all the financials on every company that's within that mutual fund.
I officially have not. I want to.
Duncan definitely
I don't even know some of the names of these companies, to be honest.
Coca-Cola? What's that? What do they do? Never heard of that before.
The difference with us, though, is all of the money that's invested and that's lent out is attached to properties.
Okay.
So it's attached to real estate, local. It's a market that we understand, and we have appraisals on all of them. A big thing to mention, too, is within our underwriting guidelines, the maximum loan to value we can do is 80% loan to value.
Sure.
So we have that buffer there. If we do have to take back the property, if the borrower isn't making their payments and we have to power of sale, we have a 20% window in case the market fluctuates as well, where if we have to power of sale, we can recoup the costs and preserve the capital of the investors.
Okay.
That's the maximum, 80%. We like to stay a lot lower than that.
Yeah.
Most of our approvals or deals that we're looking at doing is in the 70%, 75% loan to value range, because that just grows the buffer. It allows more wiggle room.
You touched on something that just sparked a light here. So a lot of people are probably wondering, what happens if somebody misses a payment? What's the process? What happens? Do they get paid still? Like what happens if somebody misses a payment?
Right. So with the way that we have our mix structured is if someone misses their payment, we start the process to recoup the payments before the 15th. We pull every payment on the first of the month. We have that 2-week window, give or take, to make the payment back, collect it from the borrower. If they still can't make it, we have to start the process to go down a legal route. Our mix managed by Investor Suite, which you may have touched on in a previous
Probably.
podcast.
Yeah, we probably talked
Last
about it. We
week,
talked
yeah.
about it. A ton of stuff. Yeah.
Right. So they go through the entire process of the power of sale once we get the lawyers involved.
It's a ton of stuff.
We talk about a ton of
So
stuff.
I do remember one of the stocks I'm in. It's called Millennium Mining. It's in Alaska. I have no idea the company backing or what they do, but this is more of a local approach where I could probably put my investment in here, and it's a little less risky because I know you guys know the market, and you're going on top of houses.
Correct.
So it could be less risky. Like that's interesting. It's very interesting.
Yeah. I mean, I think that's good. Yeah. I think that covered a lot about it. If anybody's interested in investing in the MIC, tell them Sasha sent you.
Yeah. Anybody needs a solution for a mortgage, give me a shout or give Sasha a shout, or Tyler too. Like we can help you out and place you in a proper borrower lender situation, guys. Okay.
Yes. One more.
Oh, God.
What's the minimum investment?
25,000.
There you go. Boom. I wanted to ask that earlier. Hopefully you made it all the way to the end to find that information.
I love it. Right at the end.
We should probably put that in the notes. Like, watch to the end to find minimum investments.
I'll keep them dragged on. I like it, man. Okay, so that is it, guys. I appreciate it. Tyler, thanks for coming in from
Thanks
Erie
for having
Shores
me.
Capital
Erie Shores.
Investment
Erie
Corporation. If you see a blue heron flying around, just remember the blue bird, which is Erie Shores Capital Mortgage Investment Corporation.
Yep. See the blue bird, call the guy with the green suit.
Thank you, guys. All right, have a good day.
Have a good day.
Thank you.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.